What's happening with the economy right now is unprecedented in my lifetime and in your lifetime, unless whoever's listening to this was around for the Great Depression. This far surpasses, or I should say will surpass, the Great Recession. Now, we've talked about the health aspect of this. That's obviously the main concern. But without a doubt, it's leading to an economic situation which is pretty much unprecedented. So take a look at these numbers. This is going to scare you to death. The Federal Reserve Bank of St. Louis President James Bullard predicted the U.S. unemployment rate may hit 30% in the second quarter because of shutdowns to combat the coronavirus, with an unprecedented 50% drop in gross domestic product. Bullard called for a fiscal response to replace the $2.5 trillion in lost income that quarter to ensure a strong eventual U.S. recovery, adding the Fed would be poised to do more to ensure markets function during a period of high volatility. Everything is on the table for the Fed as far as additional lending programs, Bullard said in a telephone interview Sunday from St. Louis. There is more that we can do if necessary with existing emergency authority. There's probably much more in the months ahead, depending on where Congress wants to go. So, just so you understand, now the way that they calculated the unemployment rate back during the Great Depression was different. So it was a little bit different. So these numbers aren't perfectly analogous. But the peak unemployment rate, the old way they calculated it during the Depression, was 24.9%. If we hit 30% unemployment, this is the next Great Depression. This is the next Great Depression. During the 2008 subprime mortgage crisis and Great Recession, I don't remember perfectly, but I think it was like 10 or 12% unemployment was the peak. We're talking about double or triple that. And again, the way that they calculate it is kind of BS. There's a different way of calculating it called the U6 or U7 unemployment rate, which is a lot more accurate. And basically, the general rule of thumb is take what the official unemployment rate is and double it, and that's more like the actual unemployment rate. So when it was 10% during the Great Recession, the real unemployment rate was like 20%. If we hit 20% unemployment or 30% official unemployment, we're talking about 40% to 60% unemployment. Now, listen, one of the reasons for that is we largely have a service economy. And service economy can't function if the economy grinds to a halt and everybody's kind of holed up because of a pandemic. So the economy is just grinding to a halt. This is what I mean. We've never seen anything like this, because what are you going to do in a situation where a pandemic is ripping through your society and the only way to stop it is basically a lockdown? So part and parcel of a lockdown is like an economic freeze up as well. So it's going to happen. There's no way around it. There's no way around it. So what do you do in a situation like that? Well, listen, I've told you guys already, what DC has to do is a mix of freezing all of the essential bill payments, rent, mortgage, student loans, so on and so forth. And then for the duration of the crisis, gone. You don't have to worry about paying it during the duration of the crisis. And it's not like when you come back, you have to pay. Like, let's say the crisis lasts 3 months. Okay. When you come back, you don't owe 3 or 4 months of mortgage or rent. No, that's just erased, gone. So you freeze that, and then you have to give people a universal basic income, an allowance during this time frame, which allows them to pay the remaining bills that they have that are not frozen for the moment. So, I mean, that's the only way I could see out of it. And we have to, another thing is, you would think that all these years, we would have found out a way to functionally press the pause button on the economy. Like the stock market, you know how the stock market automatically shuts off when it drops too fast? When it looks like there's going to be a run on the banks? Everything just shuts off. So can't we have effectively a pause button for the broader economy where only the essential businesses stay open, all the others are closed, and everybody basically stays home, and then you have the emergency procedures go into effect, the emergency processes go into effect, where, like I said, it's a freeze on the major bills. You get the automatic allowance to pay for the non-essential bills. You know, when I say that, I mean whatever, your food, Netflix, whatever you're doing during this time of crisis, internet, like the major bills should be paused. Certain ones, you know, obviously won't be, but I think that's the only way to really get through this and weather the storm. But unfortunately, what you're seeing is we have no provisions in place to do an effective lockdown. So the economy, like the market's still open and everything just kind of immediately plummets and crashes, which leads to more pain and more desperation. I'll get you to what some other countries are doing during this crisis, which is a slightly different approach than what I'm talking about. But like the UK is having, the government is paying 80% of workers' wages, but they're only paying it if they keep the workers on. So what's happening is people are getting furloughed, they're not getting fired. You see? And so they have, I think their emergency approach is a lot more intelligent than what we're doing. What we're considering now is a tiny crumbs payment to people, not freezing the major bills so that people can't afford the bills that they're going to get. But then most importantly, giant corporate bailouts, which are going to turn to naught anyway because the companies are still going to go bankrupt, because I think the economy is going to lag for a year or two now. If you bail out the casino industry and still nobody comes to the casinos, it's only a matter of time before they're going to want another bailout. So what we're looking at here is abysmal. 20 to 30% unemployment is a nightmare scenario, and so many people would be hurt. And Congress is dragging their feet on acting to help average people, and that's terrifying. So what else is going on? The Federal Reserve to lend additional $1 trillion a day to large banks. The Federal Reserve moved with unprecedented force and speed Friday to pump huge amounts of cash into the financial system to ease disruptions that have escalated since the viral outbreak. The New York Federal Reserve Bank said it will offer $1 trillion of overnight loans a day through the end of this month to large banks. That is in addition to $1 trillion in 14-day loans it is offering every week. Banks so far have not borrowed nearly as much as the New York Fed is offering, and the loans are quickly repaid. None of the funding is from taxpayer dollars. Wall Street analysts say the huge number is intended to calm markets by demonstrating the Fed's ability to lend short-term is nearly unlimited. See, this is fascinating because during a crisis, the way the federal government is acting, they're acting as if MMT, modern monetary theory of economics, is true. Now, modern monetary theory, if you talk to a conservative economist in times where there's not a crisis, they'll tell you, no, you can't do this. This is wild. This is reckless. You can't just immediately declare, the Fed is just creating money and pumping it out there to keep markets functioning. Conservative economists would be like, no, you can't do that. We need a finite money supply. You can't just artificially create money and pump it out there. You're going to lead to massive inflation. You're going to have all these problems associated with it. But during a time of crisis, everybody's like, okay, no, seriously, we need to stop like the worst case scenario and a giant Great Depression from happening. So what are we going to do? I don't know. Anything we can do. Throw everything we got at this thing. So the Fed is just $1 trillion a day. Loan it, pump it out there. Who cares? Now, they're right. What the Fed is doing is not the same thing as tax money. But it is something else, isn't it? That when they think their back is against the wall and they have no other option, they're like, just do it. Just do it. Nobody is like, how you going to pay for it? 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 Nobody asks that. Nobody asks that because it's a time of crisis. It's like when there's a war. Think of World War II. Could you imagine somebody giving a speech during World War II? We're up against Hitler. And they're like, in theory, I like the idea of taking this guy down, but I have to ask the question. How are we going to pay for it? Everybody would be like, what? That's your concern? We'll figure it out. We'll figure it out. www.we'llfigureitout.com. So, like, they get it. Oh my God, the market is imploding. It's collapsing. I don't know. Let's just create $1 trillion and pump it into the economy. Okay. That mindset, but with things that are absolutely necessary that are a national crisis, like homelessness. Let's just end it. Like the lack of universal health care. Tens of millions of people uninsured. 45 to 68,000 die every year because they don't have access to basic health care. I don't know. Fund it. Just fund it. What are you doing? Free college. I don't know. Guys, free college only costs like $60 billion. Here they're just like $1 trillion. Boom. Disperse. Disperse it to the banks and to Wall Street. Dispersed. And nobody bats an eyelash. Not a single conservative commentator. Nobody on Fox News. Nobody on CNBC. Nobody on Fox Business. I don't know. This is very irresponsible. And how are you going to pay for it? You can't just create money. Money doesn't just grow on trees. Well, it turns out, and this goes back to the MMT point, it turns out when you have a sovereign currency, the United States government controls its own currency, you actually can kind of do whatever you want. Because you know what? You're never going to go bankrupt. Because you could just print more money. Now, I get it. That does have some negative consequences and side effects in due time with certain conditions arising. You do have to worry about inflation, for example. But the fact of the matter is, it is very, very different from a person trying to balance their own budget because you don't make your own money. So there's obviously a fundamental difference there. And you do have more leeway to act. So, but I mean, think about that. $1 trillion a day. $1 trillion a day. $1 trillion a day. I don't know. To me, I think it would be a lot more reasonable if we just had the proper processes in place where we could effectively press pause on the economy and only have the essential functions still going on. And, you know, again, immediate emergency package set up where we need to prepare for something like this for the future because another pandemic will happen at some point. And that should be an option. All non-essential businesses, press a button, boom, shut down, market shut down, only the essential businesses functioning. It's effectively a lockdown order. In theory, it makes sense. Freeze the major bill payments, give a UBI for the ones that you still have to pay. Like I think that's a reasonable approach. But yeah, look at that, man. We're talking about 20 to 30% unemployment, and the Fed is like $1 trillion a day to the major institutions. Imagine if the same urgency that they use to prop up financial markets, imagine if that urgency was used to prop up the people in a situation like this. The country would look a lot different. We wouldn't have nearly as many homeless people. We wouldn't have nearly as much poverty. But the bottom line is, when they think it's absolutely necessary, they do it. They find a way. They get the money. There is a difference between the Fed and tax money, but nonetheless, the principle is still the same here. They're operating with the logic of MMT. That's exactly what they're doing. I just wish that mindset was also applied to looking after the people.